Good afternoon. It's Sunday, 4 p.m. I'm doing another live session of Lumida Non-Consensus Investing. Thank you for joining. Got a lot to get through today. I'll walk through a chapter on China by John Mearsheimer. He's a kind of leading neo-realist political thinker at the University of Chicago. Very thoughtful perspective here. Just talk about what is neorealism, how I think it explains a lot, and then we can talk about stocks, talk about some international market, a Latin American stock that we picked up the other day, a bank in Greece we like, American stock. I want to talk as well, and also maybe some themes in high beta that I think are displacing some old guard high beta themes. So a lot to get into in the Northeast. We've got a lot of snow dumping. I haven't seen this much snow dumping in quite a long powder, just piles and piles of stuff. Powder. I think I've gone just to address the issue early. Don't let it compound. Don't on you. So been doing that. There's just some parts that you can't rely on robotics or AI or machines to deal with, right? You just got to get out there. You know, I recommend there's a great song, Johnny Cash, you can listen to if you're out there and if you're suffering. It's called Hurt. It's a beautiful song, by the way. He's got a wonderful raspy voice and the lyrics are just beautiful. So there you go. Hurt by Johnny Cash. I'll play it for you now, but I think it would trigger. So just a quick heads up, I'll be in Miami the next 2 days. Angelo Robles will be there. Angelo Robles has a great family office network, and we're doing a live conversation with Angelo every quarter. A ton of fun. Angelo is a global thinker and a multi-decade investor. He interviews a lot of phenomenal people, so I'm excited and looking forward to that. And then from Tuesday evening and for the week following, I'll be in Dubai for the Satoshi Roundtable in case anyone is around for that. So I'll be avoiding some of this tomorrow, but was able to do my part, help my family here get through today. So let's talk about what's happening out there. We had Davos this week. In my view, maybe the most of Davos we've ever had. You had real conversation, real talk. Would have been unthinkable to see Elon Musk speak at Davos. You know, the founder of Davos, I understand it, didn't play a role in setting the agenda here. So you had conversations and real talk. So that's productive, right? It's good to have that happen. I think a lot of people are having real conversations now more than ever. And there are difficult topics to make sense of. I think a good lens to make sense of what's happening out there in the world is the lens of great power politics, right? Great power politics is another name for neo-realist thinking. It's part of the school of international political philosophy, of which the first political philosopher was Plato, that had his own theory. I think we've advanced beyond that. And I think John Mearsheimer has emerged as one of the leading thinkers out there to explain phenomena. He's had prescient and prophetic calls and views on Russia and China and the United States. You know, these are difficult topics to talk about. I had a post on Twitter yesterday, and it just triggered a lot of people. It's a difficult topic to talk about in the same way that it's difficult to look at blood. Some people just can't do it. They don't go into hospital care. They don't go into healthcare. They don't become doctors, but someone needs to do it. You kind of have to do it. You have to look at the blood. You have to look at the issues and make sense of them because it has impact elsewhere, right? So that's what I'm trying to do. You know, as I said before, I'm not a big fan of tariffs. I do think China is a rising hegemon, and I don't think they're a good actor on the global stage. If you look at what they're doing with Taiwan, their own people, and you know, just the theft of intellectual property around the world, especially in the United States. And if you look at what the premier is doing now, where they've arrested their general, right? China itself is going on a different trajectory. Deng Xiaoping and Hu Jintao had a set of traditions and norms that they had established around succession. That's all gone. There really is no succession here. It's like a one-man party. It was one-party rule. Now it's one-man rule, right? It's like within China, it's a leviathan. That's what's happening there. And China's got the edge on drones. They've got the edge on nuclear energy. They're going to put online something like hundreds of megawatts of energy in the next 5 years, and it's insane. They are leading on energy. United States and other countries are still behind, including Germany, who shut off all their reactors and forced themselves into a bind that is costing them and Europe quite a bit. So, these are difficult topics. They're not pleasant topics at all. This is not pleasant. One of the leading and early international political thinkers is a guy named Thomas Hobbes. He wrote a book called The Leviathan. That's where the name comes from. He also quoted the term, life is nasty, brutish, and short. Okay? This is brutal stuff. The last sentence of this book, actually, Mearsheimer, essentially says, look, I hope I'm wrong because this isn't pleasant, but I don't think I am. So as it relates to China, here's what he says. He says, quote, given the grim picture I paint, he talks about the likelihood of a conflict with China. That's the context. Given the grim picture I paint, let us hope that if China becomes especially powerful, the actual results of that development will contradict my theory and prove my predictions wrong. Right? That's the nature of this subject matter, isn't it? It's not pleasant. It's not pleasant. We had maybe 15 to 20 years of, I guess you can call it like Western neoliberal thinking. The idea was that institutions were the new norm. Institutions like the United Nations, the WTO, the IMF, the World Bank, the G7, the G20, that there were just new norms established, and we had evolved from great power politics. But I'm not sure that's the case. That might have been a blip in history, and Mearsheimer makes the case that was never the case. He points out that the United States has been in 6 wars in the last 2 decades. 6 sounds like a big number, right? But if you include not just Iraq 1 and 2, but also Kosovo and Afghanistan, the numbers add up. So let me lay out just some of the basic principles of this. I think it's just fascinating. It helps you make sense of what's happening in the world and what great power competition looks like. I think this will be the defining theme for the next 10 years. It's a story of the United States and China's a rising hegemon. And China's got to make moves because China's demographic pyramid is collapsing from the base quickly. They're actually approaching a period of peak productive workforce now and in the next couple of years. So it's an interesting time for China. So let me get into it. This is page 337. This is just proof that I do read some of these books, not just for show guys, right? So look, here we go. The main causes of war are located in the architecture of the international system. What matters most is the number of great powers and how much power each controls. A system can be either bipolar or multipolar, and power can be distributed more or less evenly. But the key ratio is that between the 2 most formidable states in the system. If there is a lopsided power gap, the number 1 state is a potential hegemon. A system that contains an aspiring hegemon is said to be unbalanced. A system without such a dominant state is said to be balanced. That's a lot there, right? Let's go through some historical examples. The Greek city-states, that was a multipolar world. There was no dominant hegemon. There was a lot of conflict between the city-states. What about Iraq under Saddam Hussein? Bad guy, evil guy, gassed people, just a wrong guy. But again, this is not about morality. It's not about morality. The point of this kind of thinking is to make forecasts about the future. We're trying to explain the world with a theory. This is a social science theory. You can't get A/B testing. Okay, so there are limitations to it. So in Iraq, you had multiple factions. You had one Leviathan, Saddam Hussein, and there was peace, right? That's an example of a hegemon in a local region. Where are we in the 80s and 90s? Well, there was a memo that was circulated in 1991, kind of the United States Defense Establishment, and it said, essentially, hey, we are the hegemon. We want to keep it that way. And our goal is to deter any rising hegemons. Okay. Fast forward to today, and the United States has a policy statement where the policy is we view China as the primary emerging threat. We need to focus our attention there. Okay. That's a transition we've made. Somewhere in the middle, like 20 years ago, the positioning statement was the United States should have the ability to wage a two-front war. That was like the intermediate step. Now it's, hey, it's all about China. It's all about China, okay? You think about Venezuela, you think about Iran, you think about Russia, you think about Taiwan. The story behind the story is China. Okay, so it says the key ratio is that between the two most formidable states in the system. If there's a lopsided power gap, the number one state is a potential hegemon. The number one state, of course, here is the United States. A system that contains an aspiring hegemon is said to be unbalanced. Well, that would be China. So we have an unbalanced state of affairs. Okay, and that situation is more conflict prone. That's the argument that Mearsheimer is making. So he lays out a brief summary of what neorealist theory is. Hey Stein, good to hear from you. Let me lay it out here. So, Mearsheimer starts with the observation that if you zoom out at the international level, if you look at nations are in a state of anarchy with respect to one another. There's no higher power to appeal to. You can't call 911 and say there's a neighbor or some intrusion on my lawn. There's no recourse, okay? The United Nations is not that, right? They don't have any teeth. They don't have any military, okay? So the premise one of this framework is the observation, which is the fact that you can describe the organization of nations as anarchic in nature. That's one. And the other premise is that nations seek to survive. It's another key premise. These are not really controversial. We have an anarchic international system, not a hierarchical international system. The third premise right here, states can never be certain about the intentions of other states because intentions are inside the heads of leaders and thus virtually impossible to see and difficult to measure. That's premise 3. You saw this in the Cuban Missile Crisis. You almost came to war because the United States cannot interpret the intentions of Khrushchev and vice versa. And there have been great case studies around like nuclear war was a real possibility. Fortunately, there's a de-escalation, but they studied this in school. Like, well, what were the perceptions that party A had about party B and how did that lead to an escalation? And that's what he's talking about. So, China's premier just put their general under house arrest. You can't make long-term forecasts about China's intentions. There are some theorists that say that China's Confucian values, which include benevolence, the great virtues in Confucianism, means that it's less likely to engage in war. Well, how do you make some forecasts when you can't even see leadership succession? At least with the United States, you can look at the parties, you can look at elections, you can see there's constraints from Congress sometimes, or the judiciary as well, or even from the executive branch, right? So, Mearsheimer continues. He says, quote, one obstacle to world domination is that it's very difficult to conquer and subdue distant great powers because of the problems associated with projecting and sustaining power over huge distances. The point he's making is, hey, if the imperative is to survive, and you're in an anarchic condition, then the objective of these nations is to accumulate power. That's it. Power. Accumulate power. That's what you should expect. And that you'll expect hegemons to act in their interest. Okay? This is not capitalism where you have rule of law and you have free trade and you have voluntary exchange. Okay? There's no juridical governance around this. If you want that theory of philosophy, you can read Perpetual Peace by Immanuel Kant, one of the greatest political philosophers and philosophers of all time, one of my heroes. That's an antidote to this stuff, but Kant's not trying to make predictions. Kant's just trying to lay out a world in which you have peace. What are the preconditions of that? We'll maybe talk about that a bit later. So, he goes on to make the point that, nationalism is a tendency that countries have, and that nationalism as a tendency makes it very difficult for countervailing value frameworks to take hold. What's a countervailing value framework? Well, the Marxists would say, workers of the world unite, we're all workers, look through the state, look through your country, those are all bourgeois concepts, we're all workers. That's the key distinction of identity. That's nonsense, of course, right? Another concept would be we're all Europeans, we're all Americans, some other kind of identity concept. Maybe that works, maybe it doesn't. Spain has some secession risk around Catalonia, for example. There's another kind of relationship out there. Well, what about economic interdependence? What about economic interdependence? Isn't there a value around trade and mutual exchange? This I find compelling but not satisfactory. It's very satisfying intellectually. I love to be able to say that. It's a whole theory of when two countries have McDonald's, they never go to war because they trade, right? When goods and services cross borders, armies don't. As a capitalist, I love this theory. It warms my heart. It's like a nice warm milk before bed or a hot tea. I would love this theory to be true. It's a great theory, isn't it? It's worked well in the period of globalization. Obviously didn't work in the Russia-Ukraine conflict. McDonald's are gone from Russia. In World War I, Mearsheimer points this out, prior to World War I, I should say, the United Kingdom was importing quite a bit from Germany, which they saw as like a rising hegemon. And I don't even use that language, but they viewed Germany as an increasing threat. Its productive capacities was increasing quite a bit. And Britain, UK had to make a policy decision on whether to wean themselves off of Germany or continue to trade with them. And they continued to trade with them. That was the decision they made. Their logic was, well, they'll just sell the product somewhere else. And isn't that what you see today? Well, okay, if the US doesn't buy China EVs will find a market in Europe and apparently Canada now. So there are other examples where countries, even at war, will continue to trade while they're in war. So this is, so this is another phenomenon that we see. So unfortunately, economic interdependence may not be enough to override nationalism. Nationalism is very powerful. I have a friend in Russia. I was in Russia in like 2015, something like that. Or, yeah, somewhere around there. And she's a major critic of Vladimir Putin. She can't stand him, thinks he's a bad guy. I'd agree with that statement. But she's proudly Russian. She strongly identifies as Russian. She's proud of Russia. When I heard her share her criticisms around Putin, I said, okay, she wants to get out of the country. She wants to go to Western Europe, maybe come to the States. No, she's proud Russian. She's a nationalist. Many people are, right? You have a favorite sports team, you probably have a nationalist tendency. It's genetic. We have sports teams. We like the countries we grow up in, even if they're not the countries our parents came from. My parents are from India. I identify as American, right? I take great pride in the Constitution, the Declaration of Independence, and the rule of law. And I think it's just an incredible historical experiment that is the United States. I'm excited to be a part of it as an entrepreneur. So that's nationalism too. China has nationalism also. Chinese citizens, even though you've got record high youth unemployment, there's also nationalism. Here's another point Mearsheimer makes, really interesting one. So in 1998, when there was increasing talk about China taking Taiwan, at least talking about this, the United States sent a carrier battle group in the Taiwan Straits in the South China Sea. It was a defensive maneuver just to symbolize U.S.'s interests. The reaction in China was the opposite. China perceived it as an offensive action, and it stirred up nationalist pride. So the people got excited, they got stirred up. They said, we got to do something. So the game theory around this stuff is just bad. It's just bad. When you read the arguments he's making, you get the historical examples. It's that root causes we identify with the nation above other kinds of frameworks. We identify with the nation more than economic or trade framework, right? I'm not importing from China. Some small business there is. I don't identify with that situation. Okay. We identify with the nation more than we do with other ways to relate to nations, right? You see that in Canada now, right? Canadians, when they shop, they're trying to avoid American products. I got a DM from a wealth manager in Canada who he was really triggered and upset by this, and like my heart goes out to him. It's sad and unfortunate. But yeah, he's like, we don't like the United States. That's unfortunate. So the book is titled "The Tragedy of Great Power Politics." It is a tragedy. Okay, he's not saying I want this to be the world. He's not saying this is how you ought to act. He's not saying this is how you should conduct yourself. He's not saying this is optimal strategy for a government. He's not saying any of that. He's saying, given the architecture and distribution of power, you can make predictions on how states will behave. That's what he's saying. So I don't care if it's a democratic state. I don't care if it's a dictator. Just tell me the distribution of power. You can boil a country down to an entity, its power, its interest in the region. And you can make a prediction they will seek to maximize that power and exert regional influence. And his prediction is that China would seek to control the region around China, which would extend to South Korea and Japan and the Philippines. Okay, that's the prediction he makes. So let's keep reading on here. So he says, in sum, the best way to survive in international anarchy is to be the sole regional hegemon. The best way to survive in international anarchy is to be the sole regional hegemon. That's what China's trying to do. That's what the United States is trying to preserve, right? The United States is the only regional hegemon in modern history. He even goes through the founding fathers. I found this quite interesting. He says, even the founding fathers were on board with this. Now, I wasn't convinced that initially. You remember the whole statement of the founding fathers of avoiding foreign entanglements, quote unquote. That was the guidance. But he says, the founding fathers and their successors consciously and deliberately sought to achieve hegemony in the Americas. Manifest Destiny is a part of this. The initial colonies were on the East Coast. They expanded westward. Monroe Doctrine is a part of this too. The United States gave serious thought to conquering Canada throughout much of the 19th century. Indeed, the Americans invaded Canada in 1812 with that goal in mind. Okay, there was a war party that was a political party with this policy position. It was, hey, let's go invade Canada. So, hegemon theory has been alive and well in the United States. So Mearsheimer goes on to say, a great power's work is not done once it achieves regional hegemony. It must then ensure that no other great power follows suit and dominates its own area of the world. That certainly explains the action we saw in Venezuela and we might see in Cuba and potentially Greenland, doesn't it? So if China continues its striking economic growth over the next few decades, it is likely to act in accordance with the logic of offensive realism, which is to say, it will attempt to imitate the United States. It will do so primarily because such domination offers the best way to survive under international anarchy. Again, my point is that I think China has maybe a decade to take some action because their demographic pyramid is in a bad spot due to the one-child policy. Maybe robots change that, though. They probably do change that, actually, right? So if the robot story comes alive, then there's more bullet points and ammunition for Mearsheimer. It says, more generally, there is considerable evidence that Chinese leaders would like to develop the capability to push the U.S. Navy beyond the first island chain, which is usually taken to include the Great Sunda Islands, Japan, the Philippines, and Taiwan. If this were to happen, China would be able to seal off the East China Sea, the South China Sea, and the Yellow Sea, and it would be impossible for the U.S. Navy to reach South Korea in the event of war. He goes on to say, additionally, China will have powerful incentives to forge ties with Canada and Mexico and do whatever it can to weaken America's dominance in North America. We just saw this headline last week with Davos, with Carney, inking a deal with China. This book was reprinted in 2014. I was told the first edition came out in 2002. It's quite prophetic. The way you measure the efficacy of a science is you test how good the predictions are. That is what science is. It's not whether we like it or not, or whether the world should be this way or not. That's not what it's about. Does it make effective predictions? So I'm going to show you guys this island chain. I thought this was pretty interesting. The first and second island chain. Okay, we found the island chain image. I share my screen here. So we do on snowy days. Snowy days are a great time to read. The island chain strategy. This is China. This is Japan. The distance between the two is about 600 miles, like the distance between, say, New York and Chicago. There's South Korea in between. Okay. This is the first island chain. And the United States operates in this area. China's ambition is to control this first island chain, and their objective beyond that would be able to push U.S. forces beyond the second island chain, which you see here. That's what Mearsheimer is saying. Okay. If China continues its rapid economic growth, it will almost certainly become a superpower, which means it will build the power projection capability necessary to compete with the United States around the globe. You know, the main point of this great power politics of neorealism is that countries are in a state of security competition with one another. They are in competition for their security. They want to survive, and they will accumulate power to do so. That's the way to think about it. Today, China doesn't have a shot of beating the United States. I agree with that. Here's a quote from Deng Xiaoping, again, one of the early reformist leaders in China in the 80s. His exact words are, hide our capacities and bide our time, but also get some things done. That was essentially the strategy statement for Deng Xiaoping. It sounds a bit similar to, it's like maybe a step before, speak softly and carry a big stick, right? He's saying, hey, lay low, build your capability up, but accomplish goals. There was a retired Chinese admiral that likened the American Navy to a man with a criminal record, quote, wandering just outside the gate of a family home. That's in reference to when the United States moved aircraft carriers into the Taiwan Strait in 1996. Again, I'm not saying that's right or wrong. I'm just saying this is the game theory of how great powers interact and perceive one another, and how you get a tendency towards more hostility. Okay. Since 2008, the Chinese government has become increasingly reluctant to constrain the expression of popular nationalism and more willing to follow the popular nationalist calls for confrontation against the Western powers and its neighbors. That's from a historian. That's from a Chinese historian. Xishuang Zhao, Chinese historian. There is no reason the United States cannot have substantial economic intercourse with China at the same time it implements a containment strategy. After all, Britain, France, and Russia traded extensively with Wilhelm Germany in the 2 decades before World War I, although they had also created the Triple Entente for the purpose of containing Germany. We do the same thing. We're importing from China at the same time. Pete Hegseth, National Defense Policy, said China is the primary threat and object of focus. Given its rich history as an offshore balancer, the ideal strategy for the United States would be to stay in the background as much as possible and let China's neighbors assume most of the burden of containing China. Another thing about great power politics is you try to delegate to someone else to take care of the job because blood and treasure are expensive. But that is not going to happen for 2 reasons. One, the forces that would ordinarily balance China are too far away from China. For example, India, which has territorial disputes with China around the Tibet region, and the Philippines and Vietnam. Second, there's a need for some power to coordinate those powers. Those powers are small powers. You need some other party to play a coordination function. Mearsheimer goes on to say, unfortunately, many countries around the world will be eager to increase their economic intercourse with China, thus fulfilling the vacuum created by Washington's efforts to cut back its trade with and investment in China. For example, the countries in Europe, which would not be seriously threatened by China, would be prime candidates to take America's place and continue fueling Chinese economic growth. In short, because China cannot be isolated economically, the United States cannot slow its economic growth in a meaningful way. It's a super powerful point, right? So the big critique of Trump's approach to China, I actually made this point too. I said, wouldn't it have been better to build a coalition, get your allies to establish a tariff wall around China and focus your attention on China? Wouldn't that make a lot more sense? I still think that makes sense, by the way. But Mearsheimer is saying, hey, Europe doesn't share your interest. Why would they do that? China would find another trading partner. This is what we saw with World War I. That's the example that was shared earlier. So he's saying China is going to grow anyway. They have the comparative advantage. They have the capability. They're going to find a market. China cannot be isolated economically. The United States cannot slow its economic growth in any meaningful way. That's what the United States is trying to do. That's your optimal strategy. You're trying to avoid war. You're trying to avoid nuclear war. You're trying to avoid conflicts wherever you can. You try to slow down China economic growth as much as you can. That explains a lot of what we see here. Let me read this section here. I mentioned this a bit earlier. Britain actually faced the same problem with the rising Germany before World War I. It was widely recognized in the British establishment that Germany's economy was growing at a more rapid pace than Britain's, which meant the balance of power between the two countries was shifting in Germany's favor. It's like the situation that we see now between the United States and China, right? China's growing more productive capabilities, or Europe and China. A fierce debate ensued about whether Britain should try to slow German economic growth by sharply curtailing economic intercourse between the two countries. British policymakers concluded that this policy would hurt Britain more than Germany, in large part because Germany could turn to other countries that would take the exports it sent to Britain. Okay. Says, we should expect to see China articulate its own version of the Monroe Doctrine and seek to push the U.S. military out of the Asia-Pacific region. I would say they already have it. You know, the one China policy, Taiwan is part of China, that is Monroe Doctrine. And this is on the positive side. We should expect most of China's neighbors to join an American-led balancing coalition aimed at checking Beijing. The point here is, whatever the United States does, in Japan, China's neighbors, South Korea, and the Philippines and India would still align with the United States, because the primary axis that governs international relations is this neorealist picture. It's not the tariffs, not the bonds, it's this. We should also see evidence of each side's pursuing a, quote, bait and bleed strategy when there's an opportunity to lure the other side into a costly and foolish war. Didn't we see this with Russia-Ukraine under the Biden administration, where Ukraine had just enough munitions to engage in a bloody, painful war of attrition? Didn't we see this in the Soviet Union versus Afghanistan in the 70s as well, where the United States provided munitions to enable an attrition of the Soviet Union? A bait and bleed strategy. We just see evidence of that. Both superpowers, as well as China's neighbors, would expend significant amounts of money on defense in order to gain an advantage over the other side and prevent it from gaining an advantage over them. The United States has taken up defense spending from $1 trillion to $1.5 trillion. That's another test of a prediction that is accurate. That's why, by the way, Lumina, we're investing in defense tech, private markets, defense tech. I think there are better opportunities in public markets there. None of this is to deny the likelihood of substantial economic intercourse between China and the United States in the midst of their security competition. Why does he keep using the word intercourse, by the way? Can't we just say the word trade? Give me 1 second here, Mike. Be right back. All right, I'm back. My son wanted to deliver an important message for me. Here's the message. Dad, you are the best because I can't read the rest, but anyway, that was cool. It's the best. That's better than like any gift you can get, any material thing you can get, by the way. That's the joy of being a dad. Let's go on here. So both parties, Mearsheimer says, will be sensitive to reputational concerns in virtually every crisis and unwilling to back down. So I mentioned earlier, one of the takeaways from this book is that there's almost like a vice-like grip that gets tighter and tighter and just leads to the likelihood of more conflict. That's one of them, reputation. So think about the tariff issues and the tariff war from April of last year, where China was offended and they didn't want to back down, and both sides had to find a way to save face. It's very complicated. How How did both sides save face? Well, that they did it. They were able to walk tariffs down from the 140% level as a practical matter. But those are the things that you should expect to see, that there'll be sensitivities, reputational concerns. So he says, look, the last 50 years of peace we've had, the bipolarity of the Cold War was a more peaceful architecture of power than the unbalanced multipolarity that lies ahead if China's economy continues to grow rapidly. So he says, he's not saying a war with China must happen. He is saying it's more likely to happen than the period of the last 50 years, the Cold War period. Since competition with China is inevitable, but conflict is not. Actually, sorry, that was the founding father of modern Singapore, an extraordinary individual, Lee Kuan Yew. He said, unlike Soviet-U.S. relations during the Cold War, there was no irreconcilable ideological conflict between the U.S. and China. He goes on to say, competition between the U.S. and China is inevitable, conflict is not. And then Mearsheimer defends his thesis. He says, quote, ideology of any sort, of course, falls outside the scope of my realist theory of international politics. Nationalism, which is the most powerful political ideology on the planet, holds that the modern world is divided into a multitude of distinct social groups called nations, each desiring its own state, and that allegiance to the nation usually overrides all other forms of identity. So he develops his thesis here. I'm just calling out a couple of key sentences, not laying out the full argument. He talks about China may have hyper-nationalistic tendencies. Anyway, so it's a really interesting book. It's a great read. In his conclusion, he says, the picture I painted of what is likely to happen if China continues to rise is not a pretty one. Indeed, quote, it is downright depressing. I wish I could tell a more hopeful story about the prospects for peace in Asia, but the fact is that international politics is a dangerous business, and no amount of goodwill can ameliorate the intense security competition that sets in when an aspiring hegemon comes on the scene in either Europe or Asia. And there's good reason to think China will eventually pursue regional hegemony. All right, folks, that's your International Relations 101. I thought that was insightful. What do you guys think? So, yeah, I got to interview Mearsheimer. I think he's an impressive intellect. All right, let's shift gears. Let me know what you guys think about that. I mean, if you play that out, that predicts Trump's response to Carney. He's saying, "Oh, you're doing a deal with China? Here's 100% tariffs." The hegemon is gonna hegemon. Hegemon's hegemon. That's what hegemons do. Okay, and I don't think America's in decline. I don't think Pax Americana is in decline. The United States still has an enormous technological advantage, productivity growth, capital markets, you name it. But if you are the hegemon and you perceive an alignment of international actors arraying against you, the hegemon is going to exercise their power. I'm not saying it's the right thing. I'm not saying it's the wrong thing. That's just what they do. Our interest here is in science, not right or wrong. Our interest here is making predictions about the world so we make better decisions. That's what we're trying to accomplish here. And it's a difficult subject to discuss. It's like looking at blood on the floor in the hospital. Someone's got to look at it. Someone's got to clean it up. Someone's got to go treat the patient who walked in. Okay. So let's shift gears. A little heavy, right? Okay. Software stocks doing well this week. We talked about it last week. I thought software stocks would bottom. There's increasing evidence they have. This is always probabilistic, of course. But I'm going to share my screen here and look at HubSpot. It's one of the names we own. I was having a chat with a friend on Twitter, Za, you guys know Za? And we're talking about HubSpot. There are, I think, quite a few software stocks out there. They're interesting. We own quite a few now. We increased our thematic exposure from 2% to 6%. We'll see what happens. I want to be surprised if there's some give back But I think a lot of people believe that you would see the death of software because of AI disruption. It's just not happening. We keep seeing sales go up across many companies. I'm sure some companies will be disrupted, those that don't have real moats or those that are just purely technical and don't have the domain expertise. But if you have an installed user base, the switching costs are too high, or companies are focused on the next source of revenue growth or how do they service their customers. They're not trying to disrupt an existing workflow. Right? They've grafted solutions that work and are effective. So I think software is interesting. It's not a layup. These names aren't extremely cheap. Some are, maybe Adobe, I guess, but 30 times forward PE, that's pricier than some Mag 7 stocks. But it is a high quality business model. I'll show you HubSpot real quick here, just to show you what my point is on sales versus stock price. Now, where earnings go, stock prices often follow, right? So this is HubSpot, and I'm going to show you their sales. This blue line is sales, black line is share price. Sales keep going up, prices going down, and you can see that their revenue growth expectations are 18%, kind of declining to 15 to 16%. Those are analyst expectations, by the way. Analysts can be wrong, could be higher. So, I just wanted to follow up with you all on that. It's an important point to realize you don't have to get the exact bottom on these names, by the way. You shouldn't go full port or lever long. You don't have to do that. In fact, it's okay to miss the first 30% of a rally, or even 50%, or even 80%. Because you're no longer in a bear market. You have strong evidence that you're not in a bear market, right? So you don't have to feel the urgency to just nail the bottom. You can leg into it. You can titrate your position, maybe go a third, wait for a moving average to cross over, add another bit, wait for it to get over the 200-day moving average. And then you have a full position. That's not a bad way to think about it. That's how I would consider approaching it here, especially since there are so many bull markets around the world. I'm talking about international stocks. There was yet another money manager that came out and talked about how they're buying international names. So this is becoming a thing now. I want to say something like 30% of our portfolios are international names, and just more and more every day. We just find good setups. Let me share one with you right now. So this is a leading mobile company in Latin America, América Móvil. And, we might get a gap down with this whole trade dispute this Monday morning. Could be interesting. So this is a 60 billion market cap company. It's got strong earnings growth. You can see that based on the forward PE is 11.4, trailing is 17 times. It's done 50% in the last year. That's strong. That return is, it's better than NVIDIA. Most Mag 7 stocks, right? NVIDIA's up 27% in a year, right? It rivals Google, right? Google is 65% in a year. Okay. So you can do well with these international names. You can do well with a lot of stocks that people aren't talking about. I like dominant market leaders. This is one of them. I think betting on emerging market, increased adoption of smartphones in emerging markets is a good thesis. People are living their lives on their phones. And this is one way to play that, but there are other ways to play it too. But we'll talk about other ways another time. They're complicated. It's a big digression. And the challenge with some of it now is that the increased price of memory is making cell phone prices higher. So that creates a wedge between the consumer and the seller of the phone, right? But I think this is a good quality business model. It's a recurring revenue business model, right? I'm showing you some statistics for you here. Valuation is reasonable. And the bear case is the revenue growth isn't that high. You can see the revenue growth in the past was in the teens, but a bit cyclical, and it's expected to taper off here. So I think this does well if revenues are higher than what analysts expect. And I think it's set up for that. The bar is so low. I mean, the revenue growth expectations here are below like nominal GDP growth, right? So this is a setup I see often. I don't mind investing in a setup like this because the bar is low. You can see, I'm showing here how the company's performed versus earnings. In the past, it's beaten. It's had surprises on revenue. So I like it when analysts are actually too pessimistic on revenue growth or earnings growth because they have chances to beat. That's what they did in the last 3 quarters. That's obviously coincided with the price of the stock going higher also. So when you look at analyst estimates, you shouldn't chase the analysts of the highest EPS growth. You have to ask yourself what's priced in or not. That's important. Sometimes you find a gem where the stock is falling and the earnings estimates are high, and maybe the analysts you believe are accurate. Well, that can happen too. That could be investable. In the U.S., I'll switch to international again in a moment. You are seeing a lot of rotations, right? Remember like Dollar General and Dollar Tree, these names were left for dead. They were in these vicious bear markets. Yeah, they're all in bull markets now, right? The return of retail stocks are back. Capital has flowed from Max 7 to these retailers. So, these businesses service low-income customers. So, there's a lot of talk around there, this K-shaped economy. It doesn't matter for the economy. It doesn't really matter for the stock market. Dollar General's up 110% in a year. Okay, so their business is doing well, which means their customers are doing well. Dollar Tree's up 80% in a year. So it's a thematic idea. These look kind of set up, by the way, don't they? So let's go international. Let me show a few charts for you internationally. Here's Greece. Greece I find interesting. Quite a few countries around the world I find interesting. I think you could probably throw a dart at a country and it's outperformed the S&P. Okay, Greece is up 81% versus the S&P in the last 12 months. The S&P, if I pull up SPY here, it's been a pullback in the S&P is around 14%. I think last year did around 18%. So I think you can own country ETFs and beat the S&P 500 this year. I think that'll work. I don't see the dynamics driving this stopping anytime soon. People are selling dollars and they're investing locally. They're investing internationally. They're buying gold instead of 10-year bonds, right? In the same way you see small cap value outrunning large cap growth, same thing, right? The S&P 500 is large cap growth. It's Max 7 that's been weakening and capital's flowed to small cap value and then also internationally. Okay. So a lot of that capital in Max 7 is just releasing to these other areas, even though now Max 7 is a bit oversold as we go into tech earnings next week. So you could get a temporary pause in this rally and that could create some good opportunities. Within Greece, we picked up Alpha Bank. Alpha Bank's got a 44% free cash flow yield. And its 4P is 9.6 and trailing P is 11. That compares to the S&P, which is in the 21.5 PE. So it's a lot cheaper. And a simple way to bet on a country is bet on the banks in the country. If you want exposure to the country, you can get the ETF, or you can own the bank. And the same thing is happening around the world. KB is a bank in South Korea. It's up 57% year over year. Okay, South Korea itself is up 116% year over year. This is Japan, up 30%, also outrunning the S&P. Let's pick a bank in Japan, MUFG. It's up 50% over the last year. right? Mexico up 59% in the last year. We own names in Mexico also, like this airport, OMAG. How about Brazil, PWZ? Brazil is up 59%. I don't know if I want to buy it here. I don't know if I want to chase it there, but there you go. It's up 59%. Some of the names in there, Nubank up 48% over the last year with a 21.4 PE. Not cheap, not bad, good growth, dominant market leader. They're going into Colombia and Mexico, expanding operations. PagSegura, 6.74 PE, pretty cheap, 73% return. Value, momentum together, one of my favorite things, and earnings growth, right? Put that together as one of my favorite things. I like that. Why can't that continue? So that's one of my big themes this year is international. I think you have to own international names. Canada's beating the United States too, by the way, by like a 10-point margin over the last 12 months. So there are things to do in the US also, but in the US, you're seeing that rotation from growth to value that I've been talking about for a few months. That's happening, right? You have the Max 7 pullback, value names have been doing well. US financials have been weaker in the last few weeks, really started with the credit card. Hey, no credit cards above 10% interest rate. That hurt financials. JP Morgan, a bunch of banks reported earnings, the decline in earnings. Capital One, it's an extraordinary business. A lot of American banks are quite extraordinary, by the way. They're in terms of the franchise they built. Capital One's another one. They announced an acquisition of Brex, which is small business credit card, for $5 billion and change. That acquisition says more about fintech than anything else. I mean, Brex raised money at, I want to say, like a $10 billion valuation in 2021. It's a big haircut. So that says if you own private venture capital stock, you should look at what your marks are. What is your true mark to market on these assets? That's not a good transaction for Stripe or other players in the fintech market. Okay. I think you have a lot of opportunities in public markets. I think you got to be selective in private markets. I think the main move is defense tech. Find the next Android. That's what we're doing. Self-plug. You should check out lumadadeals.com. There's some interesting opportunities we're looking at. We're looking at drone, defense tech. There's a lot of things out there. There's the company in Ukraine that makes those drones. And they're the leader in the world around drone technology. We're not talking to that company now, but they're on our radar. They're not raising money yet, but I want to be the next check-in when they do raise money. Those are the kinds of ideas we're looking at. Let's talk Rick Rieder, Fed chair. So much happening, right? So we started with Kevin Hassett, who's a Council of Economic Advisor, currently serves Trump. He was the initial candidate to lead the Fed. Would have been very dovish. You probably know my view. I don't think the economy needs rate cuts. We have a hot economy, 5% plus GDP. The economy is resilient. It's strong. We don't need rate cuts. It didn't need the rate cuts. Didn't need any of the rate cuts, is my view. But, Trump's view is we need Hassett. He changed from Hassett to Warsh for a hot minute. Warsh would have been a terrible pick in my view. He did serve on the FOMC. I think he's on the wrong side of history. And not only that, he'd be a hawk and he'd be overly hawkish and would be a bad pick too. So it's too cold, too hot with Hassett, too cold with Kevin Warsh. And now we're at Rick Rieder. What I love about Rick Rieder is that it's a ROM pick. This is the guy I would want to be the head of the FOMC. This is good. I'm excited. Rick Rieder, CIO of BlackRock. The guy is the largest buyer of bonds in the world between them and PIMCO. Who's the largest bond salesman in the world? Secretary Bessent. He has a Fed chair that buys bonds. He knows how markets think. He knows how institutions respond and act, and it would be a great signal of confidence to bond investors. So I think Rick would be a phenomenal choice. I'd be really excited to see that. We'll see what happens. This tells me that Bessent is calling the shots. Does Trump know Rick Rieder thought that cutting rates would potentially dampen consumer spending because baby boomers rely on treasury bill retirement income? That's a Rick Rieder insight. I thought it was a phenomenal insight. This is the baby boomer economy. Rate cuts won't have the same effect as they've had in the past because you have a lot of baby boomers relying on T-bill incomes. If you cut that short rate, you actually can hurt spending from that cohort. Okay, so that's a non-consensus idea, and Rick understands markets. So I hope he gets selected. I think that's a great idea. Independent thinking. You need independence in the Fed. That's a sign of independent thinking. We'll see. Maybe Besson is focused on long-term rates. Maybe Besson realizes that the mission isn't lowering short rates. Perhaps he's watching the long end of the curve move up and commodities rally and gold rally, material stocks rally, energy stocks rally, which is an inflationary impulse. The markets are saying, hey, we see inflation coming. You're running it hot with 5% GDP and you want to cut rates, right? That's an inflationary impulse. Energy stocks are outrunning tech stocks by a lot. Materials are too. So maybe Besson said, gee, we need a guy like Rick Rieder who can reassure the bond market, especially the long end of the curve, which is what actually matters. Most investment decisions are made on the long end of the curve, like your decision to buy a house or to get an auto financing loan. That's more the 3 to 5 year part of the curve, but it's a longer end of the curve. So we'll see what happens. I like that. Some other things to look at, and I mentioned, I think last year, maybe 2 weeks ago, that I do think that this is in the high beta land. I do think we have a rotation out from the old guard of high beta to a new guard of high beta. The old guard of high beta would be stuff that worked coming out of the bull market from 2023 to 2024. That included QQQ, although I think it'll still do well and finish the year just fine, but also included things like Bitcoin, and included like the Robinhoods of the world and the Palantirs, right? That's old guard high beta. Some of these names are down quite a bit, peak to trough. Robinhood's at 106. It topped at 152. That's in a bear market, isn't it? That is in a bear market. That's down 31% from the peak. I believe the new guard of high betas in other areas. It's certainly been in biotech, right? Biotech stocks are near their highs. It's in space stocks. It's in drone tech. So, these are high momentum areas, by the way. So they're higher risk. So keep that in mind. Markets have trends for generally 1.5 to 2 years. We had a nice 2-year trend. There are new stories in the market now. Rare earth materials, another theme, right? The White House announced an investment in a rare earth materials company recently. That story could have legs, maybe uranium too. The interesting thing is rare earth materials and the uranium, it's a trade, not an investment. These miners don't make money. They're not even really operating. They're not generating cash flows. These are stories and trades, and they're being driven by White House policy. That's what it is. Same thing for drone stocks too, and space stocks. It's not driven by earnings. They're not investments. They are trades. So bear that in mind. When those trends break, you should get out of them. That's what I would do. If it breaks 20 moving average, then you sell them. If it's on the right side of that, you can stay in them. That's one way to think about it. Let me show you biotech, for example, right? So I think people that are ideological about their investment themes won't do well. You don't want to be ideological. You got to be mentally flexible. This is biotech. It's near all-time highs. What about Rocket Lab? It's a space stock. It's kind of near all-time highs, right? It's an example. Compare that to Palantir. Palantir is at 170 and a peak of 208. 170, 208. It's a 20% drawdown, right? So I think there's a rotation from the old guard to this new guard in high beta land. My main lesson from Robinhood and Palantir, I missed out on these, by the way. In fact, kills me is in 23, I had a podcast, you can fact check me on in the summer. I said, you're going to see this theme called government AI. Now we call it sovereign AI. Jensen used the word sovereign AI. Government AI. And I said, you want to invest against that? And I say, an example is Palantir. And then the valuation got too high and I exited. Okay. Kills me. So my new mental framework is stay involved as long as the trend is there. That's it. If the trend breaks, then I would sell. It's my new framework to keep me involved in these high momentum thematic names. And same thing for Robinhood too, actually. So I'm applying that going forward and adjusting accordingly. You know, that's what you got to do, adjust. So right around here, you can see when Palantir got its first pivot buy point off the lows in March 2023, that would have been a good point to enter. And somewhere around here, you might say, well, somewhere around here, you could say, just looks like distribution, this trend could be over. Not that exciting. It's not making new highs. Momentum stocks have to make highs. They have to make new highs, right? That's their job. You hired LeBron James. He's supposed to do triple doubles every night. Otherwise, you got to talk about a salary cap, right? Your salary contract. That's what they're supposed to do. That's their job. That's how you should think about them. Okay. I think we covered a lot of ground. I'm going to take a few questions and we'll go from there. Thank you, Stein. I appreciate that. Stein's a really good guy. Did some work for us last summer as an intern. He's still in school. Stein, you should just drop out of school, bro. Just drop out of school. We'll talk about Mearsheimer. We'll talk about geopolitics, right? What are your thoughts about the upcoming midterms? Well, I mean, I would take a look at what prediction markets are saying just to get a baseline, right? Let's take a look. What are prediction markets saying? I'll pull it up on screen for you here. Actually, this is a great question. There's so many great topics to discuss here, but take a look at what's happening here. Trump Fed Chair nominee Rick Rieder, 42%. I like that. Ali Khamenei out as Supreme Leader before September, 46%. I like that too. Democrat nominee for President 2028, Newsom. Yeah, I don't like that. Next U.S. presidential election winner, J.D. Vance. So where do we find midterms? So this is interesting. I mean, this is where you would see, let's see, midterms, 26 midterms. Okay. Democrat House, Republican Senate, 47%. We'll see. It's too early to say. I do think markets are sensitive to all of this. You know, last year I wrote about this concept of the Trump bump. And you could see it in stock prices. When Trump won the Iowa straw poll, China went into a bear market like that day. And other stocks started rallying. We'll see. I mean, it's one of the variables driving markets. The other variable is this whole geopolitics that's driving international. And then the third is OpenAI. OpenAI is the bubble in private markets. OpenAI needs to keep raising money. It looks like they will. They raised $40 billion from SoftBank, $50 billion from knuckleheads in the Middle East, and there's $10 billion to go. So they should get the financing done, but then they need to IPO. They have no choice. They have a CapEx machine that they have to finance. Did you guys see Brad Gerstner's take on CNBC? Oh, this is quite interesting. Let me play this for you all, actually, then we'll wrap up there. Oh, how do I get access to the app? Oh, thank you. Great question. Let me just go to lumidainvest.com. Go to lumidainvest.com. We have a wait list there, but every week we let 20 more people get the app. It is a powerful app. It is quite a powerful app. Check it out. There's a lot to do there. If you go to Lumina Invest, it'll show you the capabilities and features. Yeah, we're gonna have a lot of fun with this app this year. So more to come. Let me go to Brad Gerstner's comments. I like Brad. I think he's a thoughtful individual. I enjoyed his podcast with Bill Gurley. Bill Gurley is no longer part of that, fortunately. He's on a book tour. Okay. Let's see. Just bear with me a moment here. The thing with monoline hedge funds is that they can't see the bigger picture. Maybe they can, but they're constrained in what they can invest in. I think international stocks will outrun many, if not all, dedicated tech-only hedge funds. It's quite possible that just Greece would outrun Coatue and Altimeter. I would rather be on that side of the bet. So if you're in a silo, you can't participate in these other opportunities. It's better to be a generalist. The downside of being a generalist is you have to do a lot of work. That's the downside. But you're in the age of AI, and that app that person commented earlier, it's all about speed of insight generation, speed of idea generation. Let me show you the first couple minutes of this. I'll give you some live takes. Okay. So notably, he owns, these hedge funds, they miss Google. Coatue had a top 40 AI stocks to invest in that would be part of the AI future. Google was not a part of that. That's Coatue. These guys have a big fancy conference. They're supposed to be connected. It's a tiger cub. They miss Google. Altimeter missed Google too. If you recall, when Apple was identifying which supplier to work with to power Siri, the view from Altimeter was not Google, maybe Anthropic. Well, guess who won that? Google, right? So don't think that you can't compete with these hedge funds with better research or just thinking differently. They're all in a Silicon Valley bubble. They all talk to themselves. And actually their access to people in management can distort their view of reality. The edge Warren Buffett has is he's in Omaha, Nebraska. He's not in New York City, and he's not in Silicon Valley. If you have access to someone like Sam Altman, that charm offensive might, to the extent he has any charm, might sway you, right, from looking at things a little bit more objectively. That's what he says.
A call that you made to me when we were sitting out together in San Francisco in June of 24, and at that period of time, software had a
software. We're talking about software now. Software is a new thing
now. Last year, the IGV is up 5.5%, SMH up 49. Chips over software, right? That's where things seem to be. At that point, you told me that the smart money was buying software. That you, in essence, thought maybe
it's supposed to buy software now, not 6 months ago, bro. Other way around.
It's a good point, Scott. I'm sitting.
We weren't buying software 6 months ago.
My software multiple chart. Look at that peak in 2021, right? We're almost 17 times forward revenue. Today we're at about 4.2 times. So we're at a generational low in terms of the multiple for software. And let's really just peel back why, right? There's a belief in the world today that I can just go to Claude Code or I can go to Codex at OpenAI. I can tell it what I want, and I can literally have it build a customer relationship management system for my business in about an hour, right? And so why do I need to buy a bunch of seats from, a licensed software company? And to be sure, this is forever going to change software. It already has. But not all software is created equal, right? There are applications which are easily displaced that I think are going to be displaced. And you see those multiples coming down. Lots of big names that were down 20, 30% last year. And we saw that coming, so we didn't own those names. But there are other companies that we own and love, like Databricks and Snowflake, that are actually accelerating. Why are they?
We passed on Databricks in the pre-IPO, by the way. We had access to that. Thought it was too pricey.
Enterprises are building agentic
solutions.
Careful
of what VC
so
sell.
when you talk about using Cursor to go build yourself an application, where do you think it sits on top of? It sits on top of that substrate that Snowflake or that substrate that Databricks has built. So we think the world is getting it wrong by creating all this stuff to say.
There's a lot of Snowflake stock. I think this is talking
so
about. I don't know.
These guys have to deliver, and so I expect we're going to see meaningfully accelerating revenues out of those companies, continued accelerating revenues, durable revenues, AI beneficiaries.
Snowflake is still below its IPO price.
Will be rewarded, but I think for the other companies, They have to prove that they are AI durable. Remember this. Why do we talk about 10 or 15 times forward revenue for software? Whatever made that valuation metric make sense. The reason we so therefore they deserve a very high terminal valuation in your discounted free cash flow. Now, what happens when that future gets thrown up in the air and you say, I don't know if these things are going to be that durable, if companies are going to need those subscriptions, the multiple, right? The discount rate goes up and the multiple compresses dramatically. That's what you've seen happen. Now, here's what I would say. Now is the time to go sniffing in software. 90% of the consensus is correct. 90% of the companies that are down deserve to be down. Find the 10% that got thrown out with the bathwater. Find the 10%. Right, that are going to benefit from AI. Maybe it's a Samsara, maybe it's a Snowflake, and I think those will be very good returning.
These are names he owns. I go through his 13 now. It's not
Samsara. Software equal, but there's a lot that deserves the pullback. That's happened.
58 PE ratio in Samsara now. No.
We will leave it there. I really appreciate getting your views.
So that was his take. Look, investing's hard. I can't blame him for buying software last year at the top. I do want to see Altimeter's returns for last year, though. If anyone has them, let me know. I made a bet that, or we made a cross bet. He's like, hey, if you have audited returns and show that you beat me 2 years in a row, then you'll buy me dinner. So we're getting our audited returns for last year. I think between the 2 years, around 45% plus, something like that. So I think that should do pretty well versus a lot of these tech-only hedge funds. So I wouldn't make more on that. Anyway, so you mentioned Apple, Google. What are your thoughts on Apple? I'm not a huge fan of Apple. I'm like, it's a great product, great business. I love Steve Jobs. I listen to Steve Jobs' commencement speech like twice a year. My kids are going to get brainwashed for Steve Jobs. He's an extraordinary individual. This is a mature company. It is in the twilight of its growth. The earnings growth just is not there. Warren Buffett sold out. That's a bit of a hint. It's a hint. They'll have more cost pressure from memory too. It's a great franchise. It's a great franchise. Apple works because of the buybacks from the company's own coffers. You notice when the Apple went into the blackout period in January, which is ending imminently, the stock sold off from 283 to 246. So because Apple isn't there to buy back the stock. Now, I think Mag 7 stocks are oversold here, though. So, it can rally along with other names. But the horse, I'd rather ride Meta. We picked up some Meta. These names do look a bit heavy, by the way. Like they're not the most exciting things to own, like versus other names I was sharing earlier, right? Again, like I think you can own a country ETF, and I would wager that it probably outruns Mag 7. Actually, I would not be surprised. NVIDIA is expected to have 60% earnings growth in 2026. I think that'll happen. I think they'll beat that. I think NVIDIA should be solid, but the stock hasn't gone anywhere since July of this year. Okay, so it's important not to be attached to these names, right? Let's show you Mag 7. Mag 7 has just been heavy also, and this rotation away from the United States, which is why international is working, is also adding pressure to those Mag 7 stocks. Because if you sell the S&P or you sell QQQ, you're implicitly selling the top components of that index. So you could see multiple compression in those names. And you are seeing value beat growth, right, in the U.S. market. So there are a lot of good things out there internationally in small cap value. I think you could still see broadening out. You have to be nimble and tactical with these Mag 7 names. Like 3 days ago, they were pretty good entries on Meta. Now, I don't know if I'd buy it here. I'll hold it through earnings, though. We'll see what happens. I got a question on Uber. I think Uber, let me pull up Uber real quick. I haven't looked at Uber in a while. I looked at it a month ago or so. Yeah, I guess it's interesting, sort of, but I don't know. Why don't we put Uber in the too hard bucket, right? Is autonomy going to crush Uber, or is Uber going to participate in that? Like you can have a debate around that, but do you have to play in that pond when there are other ponds that are more fertile and attractive where you don't have to do the brain damage, where you can take like a layup and you don't have a defender? Why not just focus on that? We don't have to get a point of view. We can choose which balls we swing at. So I put Uber in that one. I'll give you briefly the bull case and the bear case for it though. The bull case is the free cash flow yield, which is 5%. It's almost never been higher. It's at the highest. Now it's there because it's been selling off. The bear case is that Tesla doesn't need Uber. Tesla has an app. Waymo doesn't necessarily need Uber. Waymo has, Google has its own distribution. The bull case for Uber is also more international expansion. But I think there's just easier ways to invest. International banks is a pretty good theme. I think that'll keep doing well. We shared some other ideas. Take a look at the Illuminated newsletter. We're always talking about investing themes, and that goes out every Sunday at 11 a.m. Eastern. And I'll wrap up with this last point. Then I promise we'll call it a wrap. So, okay. Let's see. This is from our newsletter today called Davos and Great Power Politics. We talked about some of the macro trends. Headline: economic growth accelerating. No surprise, it's running hot. Labor market's balanced, it's fine. We're not going to see inflation there, which is good news. And we talk about software, some of the key charts in software they may want to take a look at. And Meta's rolling out Threads globally. Meta has a lot of levers for growth. They can pull levers. They can launch an ad in a new space that wasn't monetized before and monetize that. It is a neat business. They're just spending so much money on CapEx. We also have a write-up on América Móvil in here too. You can take a look at that. It's a nice little case study. Okay, get more insight into our thought process around that. And then we have some curation from Palmer Luckey's interview with Joe Rogan. And we curate these on @LimitedWealth Twitter handle. So we actually go through these podcasts with someone whose sole job is to listen to podcasts and identify the best insights. So we all get our time back. No one's got time for a 3-hour podcast. Get me the juice. And incidentally, those insights will go on the Lumina Invest app also. Building a super app, people. What else? We got some memes. Meme action here. Head of memes. So I think we'll call it a wrap. We are going to do just headline update for you. We're going to do a crowdfunding in connection with the launching of the Lumina Invest app. We're going to take it on Robinhood there. We'll share more about it. Probably be in the next couple of weeks or so. Hopefully next week, maybe the week after that, somewhere around there. Should be exciting. We've been growing very quickly, like over 230% CAGR. Yeah, I think it's a great strategy to roll out the app and equitize the community that's helped us grow and succeed. So thank you so much for listening. Again, if you're in Miami the next few days, give me a holler. We're going to get a dinner there tomorrow night. And looking forward to that. Stay warm and dry and make it a great week ahead. Cheers.